Welcome to Thriving Together, the ESOP Advantage. This podcast offers insights from BDO leaders and highlights the transformative power of employee stock ownership plans. Tune in to learn more about BDO's ESOP and how it is the embodiment of our people-first, purpose-driven culture.
Welcome to today's episode of Thriving Together, the ESOP Advantage podcast. I'm Kathy Moy, BDO's Chief People Officer, and your host for today. I'm thrilled to welcome back Blake Head, Managing Director at BDO Capital Advisors, who leads the ESOP Advisory Services Division. On a previous occasion, Blake took the lead as our host with me in the guest spot. Today, we're reversing roles, and he's here to share his experience helping business owners assess the viability of ESOPs. Welcome, Blake.
Thank you, Kathy.
I'm excited to dive into how you guide businesses through the process of considering an ESOP, from the early stages of evaluation to grasping the key considerations and uncovering the potential advantages, or for that matter, disadvantages for their company. You ready to get into it?
Yeah, let's get started.
Can you share a little bit at the start about your role within the ESOP Advisory Services Division at BDO Capital Advisors, just to help our audience contextualize?
Yeah, of course. So, Kathy, as you know, I lead a team of professionals across the country working with businesses and business owners to understand what is an ESOP, how does it work, and what does it mean for all parties. And if it turns out that it is a good fit, we get engaged to help the company essentially execute that transaction. I also want to mention that, we work really closely with our M&A counterparts at BDO Capital Advisors. So we are a little different than other ESOP providers out there. We're not coming into a project just saying, hey, you must execute an ESOP transaction. We're really sitting down with business owners and businesses to understand, okay, what are you trying to accomplish? What does that look like? Bringing both of our M&A and ESOP teams together in front of the client and really working to give them an agnostic approach and, path forward to help them execute that plan.
That's really helpful foundation setting. Thanks. So, Blake, a company comes to BDO and they're exploring options for the future of their company, the longevity, sustainability of their business. Where do you start with them?
I think for us, we always start with goals and objectives. As you can imagine, different parties to a transaction are likely going to have different desired outcomes and possibly competing interests. What might be best for the selling shareholder might not be best for the company or the employees. And even within a diverse shareholder group, an older partner, an older shareholder, might be looking to cash out, capture fair market value, sell a larger percentage, get more cash at close. A younger shareholder might be looking to ride the wave a little bit longer, get some more upside in a growing business, and might want to sell less than 100%. So in our opinion, it's really our job to use those expectations to help customize a roadmap for the transaction that's realistic and achievable. And then we need to make sure that the current company performance and the market conditions are favorable to a successful outcome before we start any project.
Yeah, every lens is different. That's really sensible for an approach. What are the top factors the business, or specifically the leadership team of any business, should be thinking about and considering when exploring an ESOP?
Yeah, another great question. So first off, I'll say that an ESOP is not for everyone. But if structured correctly, we believe that an ESOP is the most flexible structure where we can make it a win-win-win for all parties. And when I say all parties, that's the selling shareholder, that's the company, that's the employees. But there are key benefits for each of those parties that, I think are important to hit on. First and foremost, for the selling shareholder will receive fair market value in an ESOP transaction. And I think historically there's been this misconception out there that if I sell to an employee stock ownership plan, I somehow have settled or taken less than fair market value. In my opinion, that's the furthest from the truth. By law, the ESOP trustee is required to pay adequate consideration or no more than fair market value. And I think that's a key differentiator in our process. Outside of that, I think the ESOP can be and is the most flexible exit strategy out there. There's also the potential for favorable tax treatment, what's called a 1042 rollover, where essentially selling shareholders can defer capital gains tax on their sell. And then I think just as importantly, by selling to an ESOP, it allows the selling shareholder to retain operating control while preserving legacy as an independent company, but also really reward the management team and the employees who help grow the business to where it is today. Then from the company's perspective, there's significant tax advantages for being ESOP owned. Not only can you deduct transaction cost, ESOP contributions, financing for the ESOP, that is a huge differentiator versus your competitors. But in some situations, if structured correctly, we can actually eliminate federal and most state income tax, which compared to a business operating for profit, that is hugely advantageous. And then for the employee side, they're receiving a completely free retirement benefit. They're getting shares of company stock just by coming to work every day. And then when they start to understand how what they do on a daily basis contributes to the growth of a company, to the growth of share price, and to the growth of their peers' retirement account, it's really powerful. And that kind of leads to a lot of the productivity gains mentioned on our last podcast.
So supposing it is a good idea for a particular company and the right direction for them, what are the initial steps to set the ESOP up?
So for us, we always recommend doing what's called a feasibility study. And essentially it is the roadmap and design of if you were to implement an ESOP transaction, what does it look like and how do we get there? So we first start out with valuation. In order to sell your business, you need to have an expectation of value. So we come up with a range of value of what we believe we could sell a business for if we were to represent that business in an ESOP transaction. Then we look at, are there any restructurings necessary from an entity perspective in order to take advantage of some of the tax considerations and advantages we talked about before? And then lastly, we look at debt financing. Do the selling shareholders want to take on debt to facilitate the transaction? If so, what is the appropriate amount of debt and what do we think we could raise in a transaction? And then from there, we layer in the impacts of implementing an ESOP into the company's cash flow projections. So we can show a company over the next 6, 7, 8, 9, 10 years, however long it takes to repay the debt, do we have enough free cash flow to make this plan work, assuming we hit the projections? And then I think just as importantly, Kathy, we'll go in and look at some downside models. How much could we miss our projections by and still be in compliance with bank covenants? So at the end of that study, you have a sense of, is this a good idea from the company perspective? And then we're always looking to the other parties. So we'll say, okay, what would a employee making $50,000 a year receive an ESOP benefit year 5, year 10, year 15? What would an employee making $150,000 a year receive over that same time period? So at the end of the day, we know, is this good for the employees as well? And then lastly, we'll look to the selling shareholders. What does your liquidity stream look like if you were to sell to an ESOP on a pre and a post-tax basis until you're fully repaid from the transaction? And I think that might not be a one-time process. We might model several different scenarios, but the outcome of that should be ESOP is the right liquidity exit for me. Great, let's execute it, or it's not. And at least that lets you take the concept off the table so you can focus on a different type of strategic alternative when you exit your business.
Yeah, that was a clear and powerful summary of the threshold matters, the speed bumps, if you will, that you have to make your way over before you hit the gas and go all in on an ESOP. Are there other process steps our listeners ought to be mindful of if all of those make sense and line up and it's the right architecture? Are there, steps in the setting up of the process that we want to share with people?
Once the decision is made to go forward, that's when you start to bring in third parties to execute an M&A transaction, right? So step one, we will do the diligence with the company to understand the business, understand what might pop up during diligence, get to know the business better, and prepare the business to go to market. We'll prepare what's called a offering materials or a confidential information memorandum to really highlight the good parts of the business to hopefully entice debt providers to come in and fund the transaction, but also hopefully to get the appropriate price from the independent third-party trustee. Then our group typically will put together an RFP process to go to different fiduciaries or ESOP trustees, really to have the company interview and make a selection for who do you want to represent the employees via the trustee of the ESOP trust. Then from there, we typically have a diligence meeting where all parties are there. That way the trustee or the buy-side team can really understand all the great things about the business. Then we'll start negotiating the ESOP transaction and structure itself along with the debt. I'd say about 3 months later, we typically have, a lender picked out and selected, and we've got a final negotiated deal with the ESOP trustee. And at that point, it takes about 45 days for the lawyers to come in and really paper the transaction.
Let's debunk some myths. What are some common misperceptions about ESOPs that need to be clarified?
Yeah, I love this question. I think I hit on a big one earlier about if you sell to an ESOP, you're not getting fair market value. I think that's really something that we heard a lot several years ago, but I think people understand now that that's not the case. The biggest myth that I want to kind of dispel now is, ESOPs are not just for small companies. Historically, ESOPs have been for lower middle market companies, but we're seeing a trend of bigger, larger, more sophisticated companies do an ESOP transaction. Not only did we, BDO, do an ESOP transaction, but some of the clients we've worked on over the past 3 years have been of a size and sophistication that we likely wouldn't have seen in the ESOP space even 3 or 4 years ago. And I think a lot of the reason for that is the structuring of ESOP transactions is a lot more sophisticated. It's a lot more palatable, and it is making ESOPs look like a true viable alternative to a traditional third-party sale.
Awesome. Let's shift gears a little bit. You know how much time I spend thinking about our company culture and employee engagement, but you've got a lot of experience working with companies who have become ESOP companies. What are your observations about how the ESOP has affected company culture and employee morale?
Yeah, great question. I think first off, I want to say that an ESOP is not a silver bullet to solve a culture issue. So if you don't have a great culture going into an ESOP, unless you work really hard at it, you're not going to execute an ESOP and have a great culture all of a sudden. I think for those who have great existing cultures, it can really enhance the culture. And the reason for that is there's certainly excitement when you execute an ESOP transaction right away. But the reality is employees aren't receiving participant statements for 6, 9, even a year after the transaction closes. And usually early on, there's not a lot of shares being allocated. Because of the effects of the transaction, the share price is very low, and I'm probably not vested in my ESOP account. So it takes several years of receiving participant statements, but more importantly, education from the company to explain to employees, hey, this is a long-term gain. This isn't a cash bonus plan. This is meant to be a retirement plan. But once those account balances grow above a certain level, and once people understand, okay, everything I do daily helps the company, helps my retirement, and helps my peers' retirements, that's where we start to see these great productivity gains and reduced turnover. And it's just something I love to see, but I just want listeners out there to understand it doesn't happen overnight.
It sounds like you have the amazing opportunity to get to assist companies in making these business decisions that really impact their people. Let's turn the tables a little toward BDO, and you have that unique perspective of being expert in the topical matter and living inside the BDO transition to an ESOP as well. From your perspective, how does the establishment of an ESOP align with BDO's core purpose?
So, Kathy, we've both seen in the news all the M&A activity in the CPA industry. And then BDO leaders had additional options outside of ESOPs that would have had different impacts for our people. In my opinion, the ESOP keeps the great culture we already have, keeps the operation of the business roughly exactly the same as it was before, which would be completely different if we had a new investor coming in. So in my eyes, just the fact that the decision was made to put people first and help people thrive every day is truly something that I'm proud of and couldn't be happier with the decision to go forward.
Amazing. Making it maybe one level more personal, what does it mean to you that BDO took this approach?
Yeah, I help businesses and business owners do these transactions every day. It was something that was unexpected, but something I was so grateful that BDO did. Kind of as I said before, they put people first, and it's something that allows our group to go to clients and say, not only do we do this every day, we put our money where our mouth is. We are looking to transition our business in a thoughtful, appropriate manner going forward, and we're walking the same path that you are. I am just so happy to be a part of an organization like BDO that really is a trailblazer and is putting people first.
Well, as we wrap up, I want to express my appreciation to you, Blake, for your perspective on the different approaches and the considerations companies take when evaluating an ESOP. Thank you for your time and the engaging discussion. It's been a real pleasure for me.
Thanks, Kathy.
Thank you for joining us on Thriving Together, the ESOP Advantage podcast. Episodes, resources, and contact information associated with this podcast are available at bdo.com/ESOP. Until next time, thank you for listening. Investment banking products and services within the United States are offered exclusively through BDO Capital Advisors, LLC, a separate legal entity and affiliated company of BDO USA PC, a Virginia professional corporation. For more information, visit bdocap.com. Certain services may not be available to attest clients under the rules and regulations of public accounting. BDO Capital Advisors, LLC, member FINRA SIPC.